Give me a sec. Yeah, all right, guys. So thank you so much for joining into this meeting. And I don't want to waste your time, first and foremost thing. I want to give you a clear-cut understanding that this is something which we are going to refresh from the basics. If you have already got any strategies which is working for you, then you might continue with the same, because this is going to be a basic liquidity and imbalances combining strategy, where a simple process which you can enhance your trading with respect to whatever the strategies you are trading. You can add this as a confluence. So end of the session, uh, I'll stop and you guys can ask whatever the doubts you have, or if you want to have any doubts to be clarified in between, we can also get it done. So which one do you prefer, guys? Do you want to stop in between so that you guys can ask any doubts or questions you have, or do you want to directly start off with the whole session, and then end of the session we can ask the questions? Yes, no? Ask in between would be great. Later would be great. Okay, all right. Anyone else? Later. Okay, all right. Later would be great. Okay, so let me take you through a basic understanding of about the candlestick patterns, and before that I'll explain to you about how do I analyze the market with respect to charts and patterns, and then come to a conclusion where we can think in a probabilistic way, where we have a least risk and a higher probability of success. At the same time, when it comes to the market, this is how I analyze my charts. So, do you guys have any favorite pairs or currency or commodities which you want to, focus on? Then we can start off with that, or else we can pick one which I haven't done any analysis so far. So it will be fresh enough so that we can keep our analysis very fresh from the beginning. Any favorite assets you have? Euro USD, okay. NQ, okay. NQ, Euro USD, anything which most of the people do not trade with, because Euro USD and NQ, I think I have done some analysis on it. So yeah, Euro I haven't done. Okay, let's pick and Euro USD. USD JPY, I'm really sorry I did that. Even cable I did that. Nasdaq I do watch the level, so because I don't want to remove all of those stuffs. The first pick is Euro USD, we can go ahead. Anything else? Gold. Okay, gold not now, because we just finished with a NFP numbers and rallied all the way upside. It's been heading higher, all-time high. So we don't have anything to analyze the market at the moment. AUD USD, yeah, that's the good one. I don't do a trade on AUD USD. So let's take AUD USD. That's a good suggestion, Vaishnav. So what is the strategy you guys use? Anyone trading with any sort of strategy so far? Please also discuss about the spread difference, especially in this platform. Okay, there is an update. What's your good name? I can see only iPhone. There is an update which is coming through in your way. S&P 500, Sri. Okay, Sri. So the spreads and commissions will be updated in the next week. So I'll take sessions on that particularly from the next week. So first thing first, we have taken the Australian dollar and the US dollars, And now you guys take this completely from a technical perspective, because I combine my technical analysis with respect to fundamentals. But whatever you have studied so far is completely fundamental things. So whatever you learn from this whole session, please make sure that you keep us just a confluence rather than a singular strategy, because it might confuse you. So if you feel that if it's not suiting to your strategy, then completely you can avoid it. Okay. So first thing first, what I go through with respect to any charts or any patterns is that I believe, as per the strategy, if you search more about the technical analysis, there is a term called IPDA, right? Institutionals programmed and run algorithm. We can say that that particular strategy basically focus on the monetary flows or the smart money concepts, which is not SMC basically. But most of the smart monies focus on that 20-day moving average period and a 40-day moving average period and a 60-day moving average period for their quarters and their directions. So we have, on a simple note, we have, let's say, on a 20-day period, I'll take all these parameters. Let's say if you keep your three fingers like this, then whichever the higher side, if you can see any candlestick patterns which is forming similar to these three candles, the middle candle should be on the upside and all these two candles should be on the other sides. So that we can consider as the latest liquidity points. So let me mark that down. So this is the latest lower side liquidity, and this is the latest higher side liquidity if you consider from this point towards your left side, right? So this is how I mark my external side of liquidities, and my internal liquidity could be this one, because this is the latest. If you can see the three candle formations, you can call it as a swing low or a swing high. This candle we cannot take it because this candle not yet confirmed. We need another 4 more days. AUD USD should be closing below this, and after 4 days we can take this as a liquidity. But if we don't take this one, then the next one is our external liquidity is the internal one, right? So we don't have anything apart from that on the left side. We don't have anything apart from that. So we have a external liquidity which is 0.59143, and the internal liquidity is around 0.69446 levels, right? So we have marked that. And then the next step is I'll go with weekly time frame. I'll also just cross check with respect to monthly. Yeah, even monthly and 20 days is completely respecting, right? So if I want to take a quick look on this asset, I think you guys will agree with me the fact that this is a consolidation, right? Can I have a response from your end? This whole area, if we call at a consolidation, yes, no, Ritik, yes, others? Feel free to ask any doubts, because I just had my Onam Sadhya. That's too heavy, and don't make me feel like I'm just talking. If you want to unmute yourself, you can ask any doubts on the scenarios. So, do we need to take just after the consolidation at breakout point? No, the entry part, which is coming in the end, Hrithik. So, I'm not even saying that how you should enter and exit the market at this point. I'll come to that, but before that, I just want to make sure that giving an overview about the market. How do I analyze the market and get into even a 1 minute time frame? That's what I'm just trying to explain to you.
Hi, sorry to interrupt you here, but
Yeah.
could you please explain what's consolidation? Because I'm not sure about this.
So consolidation is basically, okay, all right, no problem. So thank you so much for that question. Market has three phases, right? Market has a phase where you have a trending move. Do you call this as a trending move?
Yes.
Okay. Market has another phase which is a downtrending move, right?
Yeah.
What is the difference between uptrend and the downtrend?
It's a difference.
Uptrend and a downtrend.
So uptrend is price is moving upward, and
Okay.
downtrend is price is moving downwards.
Okay, that's the
Yeah.
simplest one. Do you
Yeah.
want to answer anything else? That's okay. That's okay. That's completely
There's a
fine.
price reversal when market going down.
Okay. Anything else? Anyone? Bullish and bearish. Okay, thank you. With respect to structures and the patterns I'm talking about, you have higher lows, usually the higher highs, right? So this is how an uptrend would be always,
Yeah.
right? On the
Yeah.
other side,
Lower high, lower low.
yeah. So when you don't have a lower highs and lower lows,
Okay, so you mean sideways? Market is moving
it's a
sideways.
sideways trend. Yeah,
Yeah. Okay.
exactly. So when you have a consolidation, which means the sideways trend, when you don't have any kind of a trend involved, what usually happens, the weak players, or you know we can call it even non-experienced people, will place their buy orders and sell orders, and institutional players usually try to take out both these areas, both the higher highs and you know both the lower side liquidity and the higher side liquidity as well. Okay. So as you might know, how do we identify? So the end goal is whether how we are going to place a trade with respect to, buy or sell. It is just pressing the button with respect to the time and with respect to the, patterns or the charts which we are looking into. So when I'm looking for the longer time frame, let it be monthly, let it be weekly, or let it be 20 days period, I look for, if do I have a consolidation, do I have so for example, let me show you another example. Excuse me, sorry. So we have a clear-cut consolidation on the dollar basket index. We do have a manipulation, which I'm coming to the next point. So the first thing what I'm looking for, whether do we have a consolidation or market is in which phase in the longer run. Because if we are able to align with the longer time frame, and if we are able to even capture a 50 percentage of the move which is happening in the longer run, then we would be along with the trend. And it's always better to be with the trend, and it's always better to trade along with the trend as well, right? So the first question, what market is doing at the moment? Sorry, the first question is where is the next target and where is the liquidity? And the next question is what market is doing at the moment. Is that clear so far?
Yes.
Am I confusing you guys? No. Okay. All right. So once we identify that, then I'll go to the daily time frame. Okay, so on a daily time frame, even we have a consolidation. This particular area, we had a beautiful manipulation, which we can see. When I say manipulation, let's say even this solid area, we can call it as a consolidation on a daily time frame. We got to know that, on a higher time frame, we have a consolidation, but on a lower time frame, we have an inside consolidation at this area. We do have both sides have been taken out by manipulating this particular region, and then the distribution phase is started with the daily. You can see that after the consolidation, market have played out. Usually what happens when you think from AMD perspective, accumulation, manipulation, and the distribution, if you are able to identify the distribution phase when the market is trading within a range, and then all of a sudden moved up downside, took all these buyers at the same time. For the sellers, it has invited more sellers and then jumped all the way upside. So on a daily, which is on a lower time frame, we can see that it's already consolidated and then manipulated and trying to move towards upside. The distribution phase started from this level, which we have already marked on a 20-day liquidities. If you remember, the why exactly at pinpointed area market is taking a support at a daily time frame. If you look at this, even you will find it very beautiful. Sometimes market will, when you mark a zone like 0.63731, it will come back to the precise point and then move towards your direction. So in AMD, what happens basically, once you identify one structure, then the next one is manipulation and the followed one is distribution on a daily time frame. But if you think from a long-term structure, the similar pattern which has happened on a daily has been happened on weekly as well. So here, ideally, what is the next scenario could play out? Ideally, on a daily distribution, great. What scenario could play out for weekly or a longer time frame? Kritik Patel, your distribution. Any other answers? Might be upward trend. Okay. Is it possible the similar kind of a manipulation could happen on the upside? We are just adding into each and everything one by one into the puzzle. So consider this as a whole puzzle and you're trying to match one by one, because always when we take a trade, we will not have more than 33% of the data which is available. We have to make a decision by just you know uh, trading along with respect to the 33% of the data. So if we are able to identify that, okay, we are saying that we had a good consolidation, there is a possibility a manipulation could happen on the next phase. So if you consider this phase from last 22 September to you know even 4th December, this was a long consolidation, right, on this particular pair. At the same time, if that similar thing happening on AUD USD, it could manipulate and take out the liquidity, which we didn't had any sort of liquidity apart from this zone. This is the first side of liquidity, and the followed liquidity would be somewhere here. Let me just remove all of these things. Give me a sec. Yeah, this is the zone. And let's say on a daily time frame, okay, there is a possibility which could move towards upside on a daily time frame. Now, our entire aim is if you're able to identify the direction and the longer term bias, then you can adjust your positions with respect to the similar bias. Then we will get into the internal structures. Let's say we will go deep into the internal structures and try to identify where we can enter into a trade within internal structures. So internal structures starts from 4 hours. Let's say on a 4 hours, we are going to do the same thing. We are going to mark the liquidity, which is this is the side. This one. At this moment, if you want to check, already this has been taken out. The charts are trading here, so this has been taken out. So you can even mark these two zones. This is the latest internal liquidity which market is playing right now. And then now we are jumping towards hourly time frame to find out whether if we get an opportunity to enter into the markets. All right, we know that this liquidity has been taken out, and then market is coming back to tap to the same level from this area. If we get buyer strength, we have a possibility. If we get seller strength, again we do have a possibility to take a trade. Do you agree with me or not? Exactly at this area, if we get a buyer strength, we do have a possibility to take a trade. If we have a seller strength, again we will have a possibility to take a trade. Sri, Rima, Rohit, Samuel, Sanjay, Shivani, Vaishnav. Yes. Fayad, yes. Sorry, Fayaz. Anyone else? What could be your ideal scenario where you're trying to take a trade? Not clear with the question. Okay. So let's assume you have already marked the liquidity points. Isn't it possible that whether you can even look for a trade with respect to, okay, say if I'm saying that I'm keeping my stop loss below this area, and this is my trade. Or I can even say that, okay, this has already taken out the liquidity. Now I'm targeting for the downside, the previous one. Isn't it both have a 50-50 opportunity at this moment? Or I would rather put it in this way. How many want to go long or how many want to go short?
I will wait for the next candle for
Sorry?
confirmation. We'll wait for the next candle for the confirmation.
Okay. Then my next question is, if the next candle goes like this,
Yeah.
in 1 hour something has happened. If the next candle goes like this, what will you do?
Maybe that's a part of manipulation.
Sorry?
Maybe that's a part of manipulation.
Okay, okay. So you missed that trade, isn't it?
Yes.
Because when we are, actually trading, there are most trades will be successful when you don't have an answer, when you don't, I'm not saying that you should be trading against not having a confluence or not having a confirmations, but I'm saying that most of the decisions what you are going to make is going to be without thinking about whether the market is going to go in either direction. You just have to think from a risk perspective. In my opinion, I would say both trades are valid because both has the low risk and high reward probability.
Yeah, but we can't do both trades. We
So
can't we can't go for long and for short for same trade.
no, no, I'm not saying that you should do that. I'm saying if you are going short, you should be doing now. If you are going
Yeah.
long, you should be doing now. I'm not saying at exact this point, you
Mm.
can even go to 30 minutes or a 15 minutes or a 5 minutes for a confirmation and then take the trade. But I'm saying the fact that, let's say, most of the time, the trades, whatever you're placing, will have only one criteria, which is your risk. Isn't it true? Okay, what is the confirmation? That's where the next topic which I would like to highlight. Okay, so how we can identify whether going on a let's say long or going on a short is better, or going on bullish, you want to be with the bulls or whether you want to be with the bears. How do we analyze and understand? So before we jump into, let's say, all of these questions, let's say before we jump into all of the confluences, let's say, let me just take you through a chart, and I'll just turn in my PO3 and the breakup structure and all my analysis so that it will be much more easy. So end of the session, you will have 7 things with you. Not this session, end of our series of these Friday sessions. You will be able to understand, because I just want to make sure that those who are joining for the next batch, those who are joining in this batch as well, those who are watching the recorded videos, you should be able to understand what I'm going to get by end of a couple of sessions attending with me or going through in detail. So you will be able to identify with respect to even a lower time frame few things. The number one, let me just, if you want, you can make a note. External and internal structural shifts. how to identify the external and internal structures, external and internal shifts, how to keep the targets with major institutional flow. You, how many of you have done the premium and discount zones in your tradings? Can I have your answers, please? Do you know how to plot your premium and discount zones, where to enter long or where to enter short? Yes, no, no. Okay, no worries. How to identify premium and discount zones? Optimal trade entry zones, which is nothing but OTE, optimal trade entry zone. Imbalances, you can call it FEG, you can call it fair value gaps, you can call it buy side imbalance and sell side inefficiency. You can even call it sell side inefficiency and buy side imbalance, which is SIBI or BISI. So these are all the common terms used with respect to this. Could be SMC strategy, this could be ICT strategy, but mostly that term is called imbalances. Fib levels for entry confirmations, entry SL targets. So this is what you're gonna get by you know end of this series of sessions. But in order to start with this, I would highly recommend to understand. That's what we are going to complete today. I think we have got another 20 more minutes, but I'll roughly take you through the 20 minutes. Even if it's beyond 20 minutes, I hope if you guys are okay, then we can even extend. Candlestick anatomy, or we can say that candlestick psychology. Is that clear? Any? No, it's not support and resistance. Support and resistance comes within premium and discount zones. Premium and discount zones is major institutional players focusing for, let's say, if you have billions of dollars with you, you won't be able to enter to the market like where we as a retail traders trying to focus on, okay, this is the liquidity, this is equal highs, this is the change of characters, or this is the break of structure, or they won't see that. If they want to push the market, they'll see a level and they go with that level, and if the market is staying above or below that particular level, then they'll take positions accordingly. So that's how institutions play around. So if we have a strategy which we can align with institutions, then we do have a higher probability of success. That's the simplest form which we are trying to do here. Is there any questions, any doubts? If not, then we can move forward. In the next one, I really want all of you guys to, participate so that I have a quick, 100 slides, and I can take you through those 100 slides within 5 to 10 minutes, because that's as easy as topic. Thank you so much, Hrithik. So if you're all are ready, then we can start proceeding it further with the candlestick anatomy. Ready? All right. Thank you so much. So why I've said that I do personally believe, in terms of candles and charts and patterns, wherever you have open, high, low, close, you can trade that asset. Whether if you are trading with respect to, Nasdaq, gold, or AUD, USD, USD, JPY, Euro, USD, each and everything has its own, um, way of moving with respect to the market, but it all has one thing is common, which is open, high, low, close, right? So let me quickly go through the charts and patterns, which but what I want to emphasize on these high and low, I want you to think from a trading candles perspective, rather than who is in control, whether the buyers are in control or the sellers are in control. um, you know rather than directly explaining the fact that, okay, whether do I want to go with buy or sell. Before you answer to that question, if you have a psychological bias towards the charts, then this is something like you are adding to your puzzle. When the puzzle is completed, you can take your entries. Okay, so let's say, for a fact it has open, high, low, and close. Why we are calling it as a green candle? Because market opened here. Market tried to push downside. When I say market tried to push downside, sellers have tried to push downside, but buyers have regained the strength and closed it above, below the you know high of the day, right? And then candlestick sentiments, which we have, for a fact, this is bullish candle, this is bearish candle, where buyers are having strength and sellers are having strength here. Even again, buyers having more strength, sellers having aggressive strength. Because when I say sellers are having aggressive strength, means this particular candle, buyers have tried to push towards upside, but here both had a fight this particular area, because this is where market opened, and both had a fight. On this particular fight, sellers have regained their momentum, and they were able to close the charts below this price. Is this clear? Am I going to basics? Guys, come on.
Yep, we understood.
No, am I going too basics? Because is it okay if I continue, or do you think it's too basics?
It's fine. Uh, I think it's good. We can understand at this point.
Okay,
It's
all right.
not too hard.
Okay, all right. Thank you so much.
Yes,
So,
yes, yes, sir. We can understand. Yes.
okay, thank you so much. So let's say, for example, if we have both buyers and sellers are fighting each other at this point, then an indecision candle, right? We can even call this as a particular, thing as an indecision candle. And the first question you will be asking yourself when you see a chart like this. Now, when you look at your, candlestick analysis, or when you look at your daily candle or a weekly candle or a monthly candle or even a 1 minute candle, you have to ask yourself who is in control at the moment. Can I have one answers, please? There is no confusion.
Buyers, buyers, and it's a hammer.
buyers are in control. So 20-day buyers are in control. Okay. Now, the next question, I'm just moving my charts to weekly. Who's in control?
Same buyers.
Okay. Now I'm moving the same to daily. Who's in control?
Buyers.
So let us just think for a moment, because we have another 6 more hours for this day to close. Because at this point, we have seen, let's say, let me measure this candle if it is required. So this is the open, and it went down 0.91 percentage. It went up again 1.16 percentage, and it is now at 0.64 percentage upside. At this point, buyers are in control, but sellers are trying to push the market down. Isn't it true?
Yes.
So we can call this particular thing, where is our text? Oh, sorry. On a daily indecision. And then let's move ahead with 4 hours. On 4 hours, who's in control? Guys, apart from, okay, are you guys typing it? Sorry. Buyers are in control. Okay, on 4 hours, still buyers. Sri, is that 4 hours is still buyers?
I think buyers are quite less as compared to the volume.
Okay. Sorry. So on 4 hours, we can see that sellers are in control. Isn't it right?
Yeah.
Okay. Now, if I ask the same question, last 30 minutes,
Sellers.
sorry, 1 hour, sellers, last 30 minutes, again sellers, last 15 minutes, sellers, last 5 minutes, an indecision candle, last even 1 minute, sorry. Okay, last 1 minute, buyers are in control. So we know for a fact 20-day buyers are in control, weekly buyers are in control, daily indecision, sellers are in control on 4 hours. Let's say 1 hour, sellers, 30 minutes, sellers, 15-minute sellers. Now, if you use your common sense, there is nothing I'm going to use apart from technical levels or resistance, support. If you use your common sense and say for a fact, when you align your charts analysis along with the longer time frame, because you are with the trend, right? 20-day, weekly, daily. When this 4 hour turns to be a bullish, which means we have another, you know, 2 more hours to complete the 4 hours. In next 2 hours, which is like now 3:50, right? 4 p.m. and 6 p.m. this candle closes with respect to 4 hours. If the 4 hour candle is turning out to be bullish, there is a higher probability for today to close the day as a bullish. Am I right or wrong? Yes. Thank you. Others, I want your participation as well, please. Because there is no point in going forward if you don't understand the simple thinking perspective. Because whatever the strategy you can play around, whether you can use RSI, Bollinger Band, or Ichimoku, or whatever ICT, SMC, or whatever the strategy, because most people don't have the common sense in trading when it comes to trading. That's what I've seen in my experience, because they try to complicate their analysis. They try to keep it as much as complicated as possible, because now if my 1 minute, if it is turning to be bullish, then the New York AM session, I'll come to the sessions part. Then I'll go for a confirmations on a 5 minutes. Then I'll go for a confirmations on a 15 minutes, where we had a 3 consecutive candles formed. We also had when the buyers pushed upside, when we had a break of structure. I'll come to that. I'm just trying to explain to you as if you understand the concept, but don't worry, because each and every letters and each and everything written on this chart, in the next sessions I'll be able to explain to you. So one by one we'll go. So for example, for me, I'm taking this particular level, which is London high and London low. Market is trying to take a support as this London high. Even if the market comes back to this level, I'll be aligning my view, keeping the London low as stop loss, wherein because Asia have been distributed again, and we have identified the fact that it could rally towards our higher side on a distribution on a daily. It could rally towards weekly time frame on a manipulation. If that is happening, then I will enter my trade here. Earlier I have asked a question whether should we go for a long or short. Now we can say that, okay, because so on XYZ and data, this is a possible positional trade, right? Let me am I sharing the E2T platform?
Yeah.
Okay, all right, great. So what is your target basically?
I think during this period we don't have any target, but we just have to trade like the probation period only.
Yeah,
So
on probation, what is your target?
yeah, so 5% breakdown and 10% target.
10% is the target. Okay. Which is on a $10,000 account, 10% target is nothing but $1,000, right?
Yep.
Okay. For $1,000, how many days you have to trade minimum?
I think no days.
Minimum you have to trade 30 days,
Also.
right? 1 second. Hello. Unfortunately, I'm not able to log in. I thought placing this analysis on a live trade so that we can, come back to that trade from the next week, how this is playing out.
Yeah, sorry, mine is also not opening. My E2T prop has not been opening for some time now. So I don't know if it's a problem.
I'll check
Yeah.
if it is a network issue or so. Okay. So coming back. Yeah. So by just asking these simple question itself, we were able to, place a trade. And by end of the whole chapter, you'll be able to clearly understand, how you can minimize your risk and maximize your profits. So the next one which we are going to discuss is that candle addition. For example, if you have assumed that this is a weekly candle, even the Monday could play out like a bullish, even Tuesday could play out bullish, but Thursday and Wednesday, if the market is going down, it still has a possibility to go towards upside on a Friday and close. When you look at weekly time frame, that should be acting as a bullish candle rather than a bearish candle. Do you agree with me?
Yeah.
Right? So whenever you do ask yourself who is having strength, I want you to keep an open bias. It could be buyers, it could be sellers. You can trade the trend, you can even trade the counter trends, and you can be right. But whenever you align yourself with respect to the higher time frame, you will have higher probability rather than going against the trend. So this could be another scenario where you have a Monday solid bullish close, Tuesday another solid bullish close, Thursday an indecision bearish candle, followed by a Wednesday and followed by Thursday. Market is trying to take out the liquidity. You might have internal structure liquidities and try to take out that and then push towards upside, keeping us an indecision candle. And Friday closes a normal candle. But when you look for Monday, this whole week would have been played out a weekly candle as a complete bull's play. Or people would have been bought whenever sellers are trying to push the market downside, buyers have regained their control and pushed towards upside. This could be another scenario as well. And another one, you can start the day with a bullish on a Monday, even a dump on Tuesday, followed by a consolidation on Wednesday, and then Thursday, another consolidation, and followed by a good push towards upside. But we might say on a weekly time frame, it's an indecision candle. Why I'm stressing more about candlestick addition at this point, because if you are able to analyze candlestick addition and who is in control, you're okay. I'm not saying that 80 percentage, in my opinion, your problem will be solved, because you will be aligning yourself with respect to the big players who's trying to place orders as and when the market moves are happening, right? So try to make sure that you always focus on 20-day, weekly, monthly time frame to analyze your bias, and try to focus your lower time frame structures. Whether you could be trading even 1 minute, but within 1 minute, you might, if you are trading, along with the trend, even if you hit 1, 2, 3 stop losses, the fourth candle or the fourth trade would give you all of the losses which you have incurred in the 3 trades, and one trade would be profitable more than 1:4 or 1:5 or even 1:8 or 10, right? So when you do a candlestick addition, the next topic we might stop. We will just do this exercise and then do a candlestick addition from the next session onwards. Any questions, any clarifications, I'll be happy to help you guys. So please make a note. We have to start from a candlestick addition from the next session onwards. Hey Sinu, I have a query. So as per the probation criteria, we cannot risk more than 1.5% per day. What will be your suggested volume size to play it safe? Okay, that's a simple question. So earlier I have asked you what is your target, 10%. Then I asked you what is the minimum days you should be trading, 30 days. So 10%, which is $1,000 divided by 30 days, then what is your per day target?
30.
$33, isn't it?
Yeah.
To achieve $33, how much you want to risk? Fayaz?
10.
There is your answer.
So what if you are able to achieve the $1,000, the 10% before the 30 days? What happens?
You might have to trade and prove your consistency again. But I don't know how many have thought in this perspective, because you just want to achieve $33 per day and you have to be consistent enough every single day. And people who say that this challenge is very tough, making a trade with respect to after understanding all the factors and keeping with respect to discipline, risking only $10 per trade, which is not even 1.5% of your capital, which would be 0.025%, which is even $25, but you are risking only $10. Even you can, trade with respect to 4 or 5 or 6 trades per day. Even if you lose all of them, you're not going to lose more than 1% for the day. Isn't it clear?
Yes, it's clear. But Chris mentioned that with the probation, our highest should be like 4 trades per day, and our lowest can be like 0. There can be days where we shouldn't have to take trades if we don't see any setups. Yeah, so
Not going against Chris, because if he has said that the highest should be 4 trades per day, because you can align yourself with respect to 2 trades in Asia or 2 trades in London, or if you want to trade 2 trades in London and 2 trades in New York, you will try to focus quality more than quantity. That's might be the reason he might have said. And even going ahead with the same format, my suggestion would be, if you want to achieve 10% in 30 days, on a simple math, you have to achieve $33. To achieve a $33, you can, if you want to trade 4 trades per day, okay, divide that $33 by 4, and you can risk $10 in a trade, and you can try to achieve a $40 in a trade. Even 3 trades goes wrong, you're going to lose $30. If one trade is winner, then you're making $10, which is break even. Then you can focus on your process, and then you can focus on your strategy. You can refine your strategy, try to win at least 2 trades. You would be done for the day. If you're able to get at least a 50% win ratio, then you're making 10% for the whole month. If you are making 10% for the whole month, then you're making 120% per year. Then you're making let's say 10 years, and even you can compound and get the answers. So I hope this session helped you to think in a different perspective what you want to really achieve, because I want all of you to write it down. The first 3 points, let me repeat that. Know your purpose, what you want to really do, or what you guys want to know as a trader, whether you want to risk 1.5% on any given day, which is $150, to achieve just 10%, or do you want to risk only $25 to achieve and go with a slow and steady pace, trying to go slow as long as possible, and know your values as a trader, because some might be walking fast and thinking fast, and it would be much more better for them to be a scalper who can take actions within fraction of seconds and make decisions quickly. But some might be eating their food very slowly, even drinking it whiskey, taking by sip. You could be a positional trader. So understand your values, please. Find time to understand your strength, and then what is the process you're trying to match with respect to your values and strength. There your success lies. So all the very best. Have a great weekend. Please do homework before at least the next session. If you have any questions, any clarifications, feel free to ask me. We have another 3 to 5 minutes. I'll stay for any questions, any clarifications. Then we can see you on the next session.
Are you going to post the recording in the group?
I'll do that.
Okay, all right. Thank you.
Thank you, Fayaz. I hope everyone is okay with the session. Please go through the details, and all the very best, guys. Take care. Thank you, Shivani. Thank you, Rima. Thank you, Vaishnav. All right, guys. Take care. Bye-bye.